Welcome to Financial Issues, where we help you steward faithfully by honoring God with your investments. Now listen in as we give you the practical tools and advice you need to become a biblically responsible investor.
This is Financial Issues, where we help you defund darkness, fund the light, and doing it all investing with biblical integrity. Great to be here with you folks. Seth Udinsky, Samuel Case, and your host, Mark Minnella.
Welcome everybody.
Brother.
It's Friday.
Can't believe it.
It is Friday.
It's the fourth segment of our week now, and it's zipped by.
Exactly, the fourth segment. I don't know about you, but we have had a great time here, and I'm hoping the show has blessed you as well. That not only was it informative, but I hope you had a good time with us, because that's really what we want to do, is come together, brothers and sisters, coming together in the Lord, enjoying His presence, and doing the best we can with what He has endowed to us.
Yeah. It's been awesome, brother. And folks, of course, we'll obviously be here next week, God willing. Mark's going to be back in his home studio. We'll be here. We're still going to be together. Mark's the host of Financial Issues. He's obviously not going to be here with us, although I do think perhaps in the future we'll be able to do this again.
Yeah, we're going to try as often as possible.
Pretty awesome.
Here, yeah.
Pretty awesome. And folks, of course, we want you to join the conversation as well. So today, it's a question day. We're going to answer a lot of questions today. 610-363-1110. The phone lines are open. We want to hear from you. 610-363-1110. Light up those phone lines right now. They're open. We want to talk to you. We want to hear your questions. We want to help you. 610-363-1110. We'll be answering your questions, a lot of the partner questions as well. We'll also be talking yesterday. The markets dipped a little bit on some fears in a certain sector that we'll be looking at in just a moment. It'll be fun. All here on Financial Issues. Sam, let's kick it off today, shall we, brother? What happened in the markets yesterday that really kind of caused them to dip a little bit?
Thankfully, they didn't double dip. You never want to double dip your chip. That's no good. But yes, the stocks, though, they did dip yesterday amid market concerns over bad banking loans triggering a global bank sell-off, actually. Fears were stoked after regional American firms Zions and Western Alliance disclosed bad loans earlier in the week. And as a result, regional bank stocks tanked yesterday, with banking concerns even spilling over into the European market as well. Futures also dipped at the same time for major American banks JP Morgan, Citibank, and Bank of America, though thankfully, Seth, traders do appear to be recovering from their somewhat knee-jerk reaction, with the Dow Jones rebounding in futures early this morning and some of the negatively impacted banks turning positive at the same time.
That's interesting. Mark, what do you think of all this?
Well, it is interesting. Knee-jerk reactions are just that. Somebody sees bad news about something and they immediately move out for fear that it's going to take that bank down or whatever. But, things are a little bit different. I know nobody likes to hear that on Wall Street, but things are a little bit different than 2000 or when we had the big bank crashes and we had to rescue everybody. They are different in the sense that we have new regulations and things are there.
I was going to ask, Mark, are people having a PTSD flashback to 2008 with the bad loans?
Easily could, and I don't blame them, actually. That's not a bad reaction to have, but it is a knee-jerk reaction because every day a bank or some banks are having bad loans. It's just the way it goes. And when they talk about, there was a fraud in a loan, my guess is there's fraud in loans all the time. That not every businessman is like you and me and want to honor God in all we do, including being honest on our applications and things like that. So that kind of stuff happens. But here's what really concerns me is everything is so sensitive right now because of where the markets have moved. Was it 2 weeks or 3 weeks ago we talked about the bell curve on the on the market and how perfect and normal it looked? Well, now that's to the right. So it is overbought, it is overrun, and when it gets up to those levels, the fear factor sets in more because the consequences of falling, there's so much further it could fall. So I understand why people get that way, but with a longer term view, with understanding that you're owning stocks that were made for the long term to weather the bad times and go on, it makes it a little easier to just move forward. And maybe it's good to trim some of the weaker assets at that time. If you have 20 stocks in your portfolio and the last two are just they just are stinkers for some reason. It wouldn't hurt to trim those, especially now since you have most of our partners I believe, have gains from Nvidia and some other stocks. Trim those off, take the losses that you've incurred, and help offset that and move forward. And we'll talk about that more next week as we're looking at the buys, the holds, and the sells on our partner list.
You know what's really cool is I'm seeing Brian and Kara in the chat here say the FISM bank stocks that we hold, they actually went up today.
Awesome. Praise God for that.
Good to hear.
So cool. 610-363-1110. Mark, I'm glad that you mentioned Nvidia there because, folks, we do have that Nvidia petition that is live right now. We want you to sign it. Hundreds of people have signed this thing. That's awesome. But make sure that you send this to as many people as you can. If you want something to send to them as well, we put an article in the chat that Mark penned that is now live on the Daily Caller's website. You can send them that also. It gives a great explanation and a good connection as well for why what Nvidia has done is just so foolish. Really the same thing that Bud Light did with Dylan Mulvaney 2 years ago, Mark, and look at that. Yeah. Look at how that turned out for them.
Yeah. So. Well, it's not exactly the same because they're not they endorse this lifestyle, but the difference here is Nvidia has nothing to do with a lifestyle where Bud Light did.
Right.
But at the same time, and their clients are not going to back off from using their chips because they did that. But as investors, we can send a message, and that message is get back to work. Get back to doing what you promised us you would do and create great chips and new chips and then pay us great dividends and run that stock up for us and get away from trying to gaslight the culture. Bottom line.
That's great. 610-363-1110, folks. 610-363-1110. Dorothy and Tom, we see you in the call queue. We'll get to you in just a moment. The markets ended yesterday. Speaking of, in light of what we just talked about, Sam, the Dow Jones ended up down 0.65%. S&P 500 was almost the same, and the NASDAQ down about 0.5%. And like you said, Sam, the pre-markets this morning, the Dow Jones is basically flatline, a little bit above, S&P a little bit below the flat line, and the NASDAQ slightly down further below than that, but not as much bleeding as there was yesterday. Mark, why don't we get to a question here before the end of this segment? Trisha, who is a partner, she's 54, she says, hey, Mark, welcome to FISM. Thanks, Trisha.
Well,
That's so nice. She says, I'm a partner and I have a question. I have a small business. Now, other than CDs, what investments can a business make? Thanks for your input. What do you think?
Well, there are some rules, and we'll talk about those. But in general, you can invest pretty much like a normal person, unless you're in certain industries. If you're in the finance industry, if you're in an investment industry, you got to be careful. The rules and regulations on that. Banking, insurance, those have some serious regulations you got to be concerned about. So since you didn't tell us what you did, I'm just going to throw those out. And since we don't know what kind of small business you are, how you were incorporated, or if you're incorporated, are you S Corp or are you a C Corp, really can't talk about the tax implications here, but there are different tax implications. You want to be careful about that. But you do want to think about it from a fiduciary standpoint. You have a fiduciary responsibility to your company to have the liquidity there, so you don't want to invest in something that locks it up and then you can't make payroll. You don't want to put it in things that are going to give you too much passive income, or it'll be like a limited partnership and you're going to end up with UBTI, There's things like that. I would really suggest you talk to your accountant. They're the ones that should have the information on that, and then come back and say, hey, is there any restrictions on this? Or your tax attorney, someone like that, because it's going to be more tax implications than it is going to be regulations, unless you're in one of the regulated industries, one of the licensed industries.
Yeah. Makes a lot of sense. Mark, you had mentioned UBTI. For our listeners who might be a little bit unversed to kind of investment lingo, what does that mean, UBTI?
Unrelated business income tax. So if you're doing something, for example, let's say you have a blinds and drape company. You go to homes and you do that for people, but then you go and invest in something that has income coming into you, high dividends, and you have a certain amount of that comes in. You're going to have to pay certain taxes on that. That you normally wouldn't have to pay. And if you're an S Corp, it gets a little bit trickier. There's all sorts of accounting because that passes through and it complicates things. So there's this hidden tax called professional fees that you're going to have to pay to take care of that. So be careful, but just in general, buying stocks, bonds, you can do that. Just think of it as a fiduciary.
Yeah.
Am I putting the money that should be for the operations of the business at risk? And am I getting too much passive income coming Subchapter S designation?
Yeah. Folks, Mark has incredible business acumen. Mark was a businessman for many years before coming here. And so if you're a small business owner, we would love to hear from you and to hear your questions as well. We value those small businesses so much, and you've got someone here who knows what he's talking about with that also. Pretty cool stuff. 610-363-1110. 610-363-1110. Folks, numbers are, one more time, 610-363-1110. That's the number to call in. Phone lines are open. We're getting some calls in now. We want to hear from you. We'll get to those on the other side of this break. Happy to have each of you here with us on Financial Issues. If you're new, by the way, and you want to learn more about our ministry, you can check us out at financialissues.org and even consider becoming a partner today if you like what you hear. We'll be back after this.
There are moments in life that define us. Choices determine the courses we take. Choices that create life, or those that save a life, and some make life worthwhile. There are decisions to stay, or to go, to remain the same, or to grow. Sometimes we pray and make peace. Other times we take a stand for what we believe. In celebration, mourning, triumph, and defeat, we are invested in every decision we seek. Despite differences, we have one thing in common, the desire to do all for the glory of God. Keep your wallet aligned with your heart and your investments in harmony with your faith. Timothy Plan, biblically responsible mutual funds, ETFs, and retirement plans. Before investing, carefully consider a fund's investment objective, risks, charges, and expenses contained in the prospectus available at timothyplan.com. Read carefully before investing.
Are you tired of the chaos? There are a lot of noise, but only a few that truly matter. As a parent, I want to leave something that will last for a long time.
Invest $300 a month increase on slowly by the time you retire.
Not just an inheritance of money, but a legacy of godly values.
Here at Financial Issues, we want to help you grow your money, but our main goal is to help you honor God with the money that He's given you.
Invest your money in a God-honoring way. Go to financialissues.org.
My baby was like this big, and I saw his heart beating on the screen. I went from, I don't want this baby, to talking to my child on the screen. That sonogram changed my life. I went from just Candace to Mom.
To find out how you can support the life-saving mission of Preborn, go to preborn.com/FISM.
610-363-1110, folks. We'll get to those calls right now. 610-363-1110. Mark, let's get started with Dorothy and Tom calling from the great state of Florida, the free state of Florida, I might add.
I think I know who this is.
That's awesome. That's awesome. Dorothy and Tom, welcome. You're live with Mark on Financial Issues.
Good morning.
Good morning, Tom. How are you? Good to hear your voice.
Doing very well, thank you. Two questions. The first one is, what advice would you give to a young pastor just starting out in ministry, just starting a family, about investing and how to prepare for the future?
Okay, it's going to sound a little trite, but stay with me on this because it's a lot deeper than most people think when they first hear it. Do the most you can as often as you can, bottom line. Do the best you can as often as you can. So if you don't have a lot to invest, just start with a little. Just get it started. And if you don't have something through the church like some sort of retirement planner going on there where they give you a match or they just set it up for you to put the money in, do it yourself and start with a Roth IRA. That would be my suggestion. But before you do any of that, start a savings account and get a buffer zone there. Get a moat around your castle. Get something put there so that when the car breaks down, there's some drugs or some pharmaceuticals needed and your co-pays are high, you have the money to go and get, and you don't have to put it on that credit card and start that downward spiral. So build a moat around your castle, then start putting a little bit in at a time of whatever it is you can afford into a Roth IRA or to the retirement plan you have at the church.
And Tom, I'll just add, as someone who was a young pastor at one point, make sure that you have that conversation with your elder board explicitly. I think a lot of pastors assume because I'm a pastor, I have to be poor. And I would actually disagree. I would say a pastor needs to be able to provide for his family. He should not be extravagantly wealthy by any means, but he shouldn't be poor either. He should be able to provide for his family. So have that conversation with your finance committee, your elder board, and tell them, hey, this is what I may need for my young family. And they might not be able to do it, but that just might help a little bit for the pastor.
Yeah, if it's a small church, you just, and you feel like the Lord wants you there, just go with it.
Exactly.
Every situation is different, but do the best you can as often as you can. That's the bottom line on it. And that's the key to life, really. Just continuously do the most you can, the best you can, as often as you can, and then trust God for the rest.
Yeah. Tom, it's a good question. What else is on your mind today?
Yes, this is Dorothy. Hi, Mark.
Hey, Dorothy. Good to hear you, too.
My question is, after 65, is it too late to start investing? I asked the question because retiring from the job before being able to receive Social Security or opting not to take Social Security until age 67 or so, is it too late to start investing in the market outside of what you're getting in your 401k? No,
it's never too late. I think if you were 85 years old or even 90 years old, if you have froth of the abundance that God has blessed you to be a steward over, it would be a good idea to put that money to work. And now you might say, well, I don't know what I want to do with it, but if it grows, but if there's multiple types of goals. One would have been at retirement. There's different goals like that you want to take care of. And God says, hey, I'm entrusting this to you to take care of yourself, to be a conduit to others, and to celebrate our relationship. Use it for all three of those. And one way you can do that is by investing with integrity at any age and making sure you have the beneficiaries, whether it's children, friends, church, or other ministries, set up properly on those accounts. It's always a good idea to continue to invest if God has blessed you with the froth overflowing beyond your needs.
Yeah. It's awesome. Dorothy, was that helpful for you? Were you able to answer those questions for you guys?
Very helpful.
Yes.
And thank you so much. God bless you.
God bless you. Thank you for joining us today. This has been an incredibly fun week, and the calls come in and make it even more fun. So please stay with us. Join us every morning, and it's good to have friends on the calls, friends and family, and partners that we're becoming friends and family with. Thank you so much for joining us this morning.
God bless Dorothy and Tom. Mark, before we get to Jay here, just one thing that came to mind as we were talking with Dorothy's last question there. How much importance should we take, if you're in someone like her position, it sounds like, 65, you want to start investing, you probably want to consider expected life expectancy here also. I mean, if you're in good health, obviously the Lord can take us whenever he wants, but understanding, okay, I'm in good health. I could live realistically another 20 years. Mm-hmm. Is that something to consider also?
Well, it is. Hold on loosely is a good phrase I like. I once knew a lady who always seemed to have money to give to every ministry. She just seemed, everybody thought she was rich, but when she passed away, she didn't have anything. She gave it all away while she was alive. She was stewarding the money in a way she felt like God called her to be that conduit of blessings to everybody. And she didn't need much, and that's the way she was. That may not be you. God might be calling you to build up wealth to do a certain thing. He may be calling you to care for your family. She didn't have family, so she was able to do those kind of things. So, we don't want to be a burden to others if we can plan to not do that, but we also want to be sensitive to the Holy Spirit, that maybe we have all this money for retirement, maybe we have all this money for our elderly care when we get older, but God puts somebody in your path that is down and out, and you feel those tugs at your heart, those heartstrings, those tugs. Go for it. He's a great God. You can't outgive him. You can't out love him, trust him. He says he'll give us everything we need and more. So I think it's very important that God is the center of everything we do in our finances, and remember that it's not all about us. He didn't give all this money to our stewardship just to use for our families, but he did say we could use it for ourselves and our family, and that's between you and God, what lifestyle that is or where that goes. I had one little minister, and he was joking. He said, because he came back from Ecuador, and he said, I'm thinking my ministry should be a yacht ministry from now on. He was joking. But those people on yachts need to be saved too.
They do. That's right, man. They sure do.
I'm sorry. A little humor on Friday, all right?
That's awesome. 610-363-1110.
I think I want a beach ministry.
Yeah, there you go. Yeah, nice. Yeah, that'd be delightful. 610-363-1110. Sam and I joke oftentimes. We're like, why can't the cross that we bear be, I have too much money? And I have to figure out how to deal with it. There you go.
That's a challenge I'd like to face.
That's right. Exactly.
Until you do.
Yeah, there you go.
Yes, that's right.
And then,
there you go.
Then Seth, we lose him.
It's going to take a lot to lose me, Mark. 610. Of course, the Lord can take me whatever he wants. 610-363-1110. Let's get to Jay here. Jay's calling from Texas. Jay, welcome. You're live on Financial Issues.
Hello, and just wanted to call and thank Mark and Seth and Sam and your whole crew for what you do, because I love what this administration is doing now, but it's turned the market that already has mental problems into a bipolar bubble bath.
Sure is.
Well said. Well said.
That's awesome.
Yeah, we are at those crossroads right now with the market. It is a little bit overbought, and we're seeing that it doesn't have a clear direction. So it's very hard to make some decisions at this time on some things, but that changes very quickly as well. So.
It will, and I just wanted to call and thank you guys for leading us through. I know Jesus leads you, and you lead us, into this, and I for one really appreciate it. On sectors, is there any sector that is not? I mean, it's so far-reaching what this President Trump has done, that it's touched just about every sector in the market, hasn't it? I mean,
well, it has, but there's different sectors come into favor over different sectors all the time. And what I was going to do here is look up real quick the sector layout. I was thinking about actually doing the beginning of the show next week on this, but it won't hurt to bring it in right now a little bit. There's sectors that are way overbought, and there's sectors that are underbought, and are coming up. For example, I think we looked at last week, you and I even looked at that, Seth, that consumer cyclicals, I think they're just the last in line of all the sectors on their ability to perform. So there could be some stocks in there that are worth owning, but the majority of them are not on a buy signal. So we rate those across the board. And next week, we are going to be talking about that. We're going to give an in-depth which sectors are the strongest and which are the weakest and what's in between. So join us next week as we talk about that, okay?
Oh, every day.
Awesome.
Good to hear. Thank you for doing that, and keep us in your prayers.
Great. And Jay, thank you. Thank you for that encouragement.
God bless.
Brother. It's awesome.
You betcha. You betcha.
Yep.
You betcha. Bye-bye.
You're a blessing, Jay. God bless. That's awesome. Hey, Mark, I think we can get a question here from Avery. Avery's asking a good one here. She's 46. She says, hey, Mark, I just saw in your bio that you are a CKA, Certified Kingdom Advisor. That's awesome. Would it be all right for you to take a minute or two to explain to listeners what that is for those who might not know?
Yeah, CKA comes out of Kingdom Advisors. Kingdom Advisors was the organization that Ron Blue formed. I don't know how long ago it was, but I remember because I was right there with him when he formed it. So I'm not bragging. I'm just saying I know when it was formed. One of the great things he did was he got involved with universities, and he created this program for investment professionals, financial professionals. Very similar to what Seth is doing right now, where he's becoming a certified financial planner. But this is from a biblical perspective. So what they do is they create all these courses that you have to go through, and you have to pass them, and then you have to take a final test just like CFP, and then it certifies you as a certified kingdom advisor. Biblical financial stewardship is a part of it that you probably don't see in the CFP.
Yeah, definitely
ethics, well, they do have ethics, but they are worldly ethics,
Right.
not biblical ethics.
Yep.
And faith integration into all aspects of your finances. You have to go through all that, pass the test, and then you get a certification, and then you got to keep up that certification. So, yeah, it's like the biblical CFP.
It's pretty cool.
Bottom line, yeah.
No, that's awesome. That's a good question there, Avery. Appreciate that. Folks, 610-363-1110. Mark, I'm loving the conversation. It's good to hear from our listeners.
You know what I want to do? I want to throw this out to our last caller that I didn't give him anything on the different sector. Technology is number one right now.
Of course.
Consumer non-cyclicals are in last place.
There you go.
But we're going to talk in depth about that next week on one of the shows, I think, possibly Wednesday.
Awesome. That sounds great. 610-363-1110, folks. We'll be back after this.
In the last 10 to 15 years being in ministry, being married, something that has been constant in our lives is Samaritan Ministries. As we've moved, we've had babies, we've had different things come up, we have just been able to rely on Samaritan in ways that we never really even thought about before becoming members.
Our heart's desire is to plant roots and be in a place for a really long time. It's how we were raised. We see the benefits of that, but we also see the open-handedness of being used by the Lord wherever He calls, because we just assumed when we started pursuing church planting, the quickest way to get from point A to point B is a straight line. And with the Lord, sometimes you find out it looks a lot more like this. And yet, Samaritan was with us through the entire thing.
We didn't have to look into, we have to change insurances now because we've moved states or whatever the case may be. And it's just been a real blessing to us in different phases of life.
I'm Kyle.
I'm Colleen.
And we're the Gen X.
And we're Samaritan.
I started investing close to 30 years ago now. All that time, I had never heard anyone talk about setting up your portfolio in a way that glorifies God. When I first heard about it, I was listening to the radio, a show called Financial Issues. They were teaching people how to honor God with their money. That made a lot of sense to me. I guard my heart, my mind. I watch my mouth, hoping to bring glory to God in everything I do and say. Well, why wouldn't I want to do the same with my money? I decided I wanted my portfolio to glorify God. I became a partner with Financial Issues, and it's been one of the best decisions I've made. I want to leave a legacy of godliness for those who are following in my footsteps. Invest your money in a God-honoring way. Go to financialissues.org.
I found out I was pregnant when I was 21 years old. For me, I was scared, I was shaking. I Googled places to abort. We drive there, and as soon as we get there, I open the door, and the first thing that I see is a bunch of Bible verses in the walls. They gave me a little counseling session, they gave me the pregnancy test again, and they do an ultrasound. And that's when everything changed. When I saw my baby, and when I heard her heartbeat, that was it. We decided with my boyfriend at the time, which is now my husband, to continue the pregnancy together. We started coming to the classes, doing our homework, getting counseling together. We've seen the hand of God ever since we stepped into the pregnancy center.
To find out how you can support the life-saving mission of Preborn, go to preborn.com/FISM.
Folks, we've got a lot of questions here on financial issues, and it's good to be here with you all. 610-363-1110. 610-363-1110. It's already halfway over.
I'm sad.
It's crazy.
It's Friday. We're halfway through the last show, and then I got to go back to St. Louis.
So there's two solutions for that, Mark. One is you move up here. The second one is we have a longer than 1 hour show.
That's right.
So
let's do both.
Wouldn't that be awesome? We'll see, folks. All in the Lord's timing with that stuff. But yeah, it's just awesome. It's awesome. Of course, we'll be back again next week. Mark will be with us. We've got our host, Mark Minnella, here now with us, and it's awesome. Mark, let's go to Brian calling from Illinois. Brian, good morning, brother. You're live on Financial Issues.
Yes, good morning, guys. Good morning, Mark.
Good morning, Brian.
Yes.
What's on your mind?
Well, I do some investing on the Fidelity platform, and I have a traditional and a Roth.
Okay.
With, and what I want to know is, do I transfer stocks over to the Roth? Do I cash them and sell them, put them in the money market, or do I transfer them over what they call? Is it transferring them
in kind?
Yes.
Yeah. Great question.
That's my question.
And it's a question that unless you've done it already, you wouldn't know. But when you move from a traditional IRA to a Roth, you effectively have to sell everything off because you're going to pay tax on it. Because you have to pay tax when you convert it to a Roth, any portion or all. So you have to sell them all off, move the money into the Roth, and then you start setting up your portfolio there. The good news is because it's in an IRA, there's no capital gains to worry about on it. If you have a lot of great capital gains, you're just locking in those capital gains. But on the downside, there's no capital loss harvesting either, which hopefully you don't have any of those. you know. So yeah, you would have to sell the cash, then move the cash over, and then pay taxes. Add that amount to your income at the end of the year when you file your taxes as a distribution or a conversion. You'll show it, your tax people will show it, and you have to pay taxes on that, but never again because it's going into a Roth.
Okay, so you would never transfer them over stocks over to the Roth. You would put them over.
No, a traditional IRA to a Roth, you just can't transfer it over. You have to sell them off.
Okay. All right. Thanks, guys.
Well, thank you.
Brian,
thank you for being with us this week, too.
And Brian, that's awesome. Actually, Brian, I'd like to give you a shout out here, brother, because I know that you had put that question into our portal, but you took our advice, brother, and you called into the show. That's the best way to get your question answered right away. That's awesome.
Absolutely.
Thank you, Brian. Very cool. Hopefully other folks will hear that and be encouraged to call in as well. Thanks, brother.
All right.
That's great.
Excellent. Yeah, we'd love you to call in, and we want to answer your questions. If you want to make sure your questions are answered quickly, give us a call.
Yeah,
cut the line, right? Jump right to the front.
Right to the front.
Yeah,
of the line.
it's like going to one of those, Universal Studios or Disneyland. You don't have to wait in line for your
fast
ride.
pass,
Get on.
right?
The fast pass. You got a fast pass,
right.
and it's 610-363-1110.
There it is.
There's your fast pass.
There it is. Keep that number on speed dial, folks. 610-363-1110. Mark, another question here coming from Bob. Bob is 74. He says, "Hey, Mark. Good morning. Good morning to you, Bob. Prior to the 2020 election, Dan Celia stated that no matter who gets elected, expect to see dollar devaluation and inflation in 2021 and on. Well, he was spot on. What do you expect for continued devaluation and rising inflation the rest of this year and into the 2026 midterm elections?"
Interesting question. And I think you know my number one answer to that, don't you? What would that be?
It's only God knows the future.
That's right. Only
God knows the specifics. If you've been listening to the Daniel series, by the way, you've been getting that pounded into your head. Only God knows the specifics of how it's going to work out. Now, we win in the end, but he knows how it's going to work out.
Yeah, but Bob, I know that's not going to satisfy you, so let's expand on that a little bit. Only God does know the future, and we can't predict it, but we can be smart and we can look at what's going on. We can see the red flags, we can see the green flags, and we can utilize that to make the best decision possible with the information we have. I can tell you what I hope to see and what is very possible. What I hope to see at the very least is a slower dollar devaluation as this administration, as our president starts getting things under control, brings energy costs down, creates fair trade, just reduces the national debt and appoints intelligent people to the Federal Reserve.
Amazing.
I mean, with all that,
that's a miracle. Actually, intelligent people to the Federal Reserve.
With all that happening, we really could see inflation come down. Which inflation is kind of the other side of the coin of devaluation of the dollar. In reality, inflation devalues the dollar. All inflation is your dollar buys less over time. Yeah. So, and that generally happens when somebody prints trillions of dollars unnecessarily and floods it into the market. So everything goes up in price because there's more dollars chasing the same goods.
Mark, no one would do that. Why would they do that?
I don't know. It would take somebody who just wasn't in their right mind. Maybe they were aged, or maybe they weren't even doing it. Maybe it was just some radicals behind them.
But that's just speculation.
Yeah, that's just speculation. Yeah. Who could guess? And that sounds like a science fiction movie.
That's right. Yeah. Exactly right.
Hope that helped, Bob.
Yeah, it's a great question.
Well, you know what? Going forward, we do have to plan. So, I'm planning based on, I believe that God is in control, and I'm going to do the best I can with the money. Right now, it seems like we're on a good trajectory. Yeah, there'll be stumps and storms, but over time, it's going to continue to go up, and that's what this ministry is built on. Longer time buying vehicles for that. So let's find those vehicles that can weather those storms and continue forward.
That's right. And folks, we always try to tell you, only buy the stocks that always go up. No.
That's right. That's right.
That's a joke, obviously.
Only ones
sometimes
you should buy.
They go down, sometimes they go up, but it makes sense.
Right.
Well, Mark, we got another call here from Don in Kentucky. Don's giving us a ring this morning. Don, good morning, brother. You're live on Financial Issues.
Good morning, Mark and Seth. I would like some clarification. The gentleman, I think the previous caller before the last, I was in the process of calling, I think when you might took one, he was asking about conversions on the Fidelity platform.
Yes.
And I was puzzled. Maybe I didn't understand his question or the answer. I have converted some stock from my IRA to my Roth. And it moved as stock. Was that? I'm not sure if that was the question he was asking, but I wanted to clarify. Wanted you to clarify your answer in that area. Can you move a stock from an IRA to a Roth IRA without selling the stock and moving money? They just convert the stock, you move it from one to the other. Now, you do have to pay taxes. I understand that. And you covered that.
So effectively, you are selling it and rebuying it, bottom line on it.
Right.
Yeah. So,
okay.
Yeah. I mean, unless something's changed that I'm not familiar with, I've never been able to see, like you have you have XYZ stock and you carry it over and you can track it with the same cost basis. I mean, when it comes into the new a vehicle, a Roth, it is now a contribution to that Roth. So you only can contribute cash to a Roth. You can't contribute hard assets or anything like that. So effectively, if they did that for you, I'm not sure how it would go. I'll double check on that just to make sure that nothing's changed or I'm not having a little bit of lapse of thought. But I believe that since you have to pay tax on it, to pay tax, it has to be distributed out. And then you have to contribute it into the Roth. So there's no transferring directly in. Is what we're trying to say.
Don, I wouldn't be surprised too if the trading platform, like you had mentioned, Fidelity. So many of these trading platforms now make it so user friendly. It's so easy to do. So even that conversion, which maybe in the past would have been cumbersome, is so quick. Just like Mark said, it's effectively the same thing. It gets you to the same destination. Does that make sense?
Well, yes, but and I'm not questioning that. I'm just trying to clarify it to myself.
Yes.
When I moved it came into my Roth. I was still in that particular stock I was down in. It came in at the same level that I was down at. Now I'm not saying that behind the scenes they may have sold and rebought, but they didn't buy at the current market price.
Well, what I will do is I will re-look into the IRS regulations on that and make sure, and we'll talk about that sometime at the beginning of the week. And because I've never had anybody do that before. So
yeah, Don, are you a partner with us, brother?
Yes, I am.
Okay, good. So we have your email address. Maybe if we're not able to address it on the show, we can always follow up with you on a email too. Certainly do that.
Thank you, Mark.
Thank you. Appreciate
Thanks,
that.
Don.
Bye.
God bless, brother. Mark, that's a good clarifying question, and I'm glad that Don had asked that. Yeah. Yep. That's good. 610-363-1110. Again, folks, 610-363-1110. Let's take a look quickly here, Mark, before we come to the end of this segment on what the markets are doing this morning. Everything... It's kind of mixed right now. It's really more negative. Technically, the Dow Jones is in the positive, but again, it's right at the flat line. The S&P 500 and the NASDAQ considerably a little bit further down as well, with just some of the same banking concerns that we've been seeing as we talked about in the early part of the show here. 610-363-1110. Folks, there's still time. If you want to join the conversation, we can get to you. 610-363-1110. We'll be right back after this break here. Don't go anywhere.
I started investing close to 30 years ago now. All that time, I had never heard anyone talk about setting up your portfolio in a way that glorifies God. When I first heard about it, I was listening to the radio, a show called Financial Issues. They were teaching people how to honor God with their money. I became a partner with Financial Issues, and it's been one of the best decisions I've made. Invest your money in a God-honoring way. Go to financialissues.org.
If a woman sees her baby on ultrasound, it doubles the likelihood that she'll choose life. On top of that, we share the gospel of Jesus Christ with her. This is why you should support preborn.
Then they sat me down. If you were to die today, do you think you would go to heaven? And I was like, no. Keeping the child was my first stepping stone, and ever since then, God has cleaned me up from the inside out.
Help support women in need. Go to preborn.com/FISM.
The opinions and recommendations expressed on this program do not necessarily represent the opinions of the station or any of the program sponsors. Additionally, all products or services offered by the program sponsors may not be known by the program.
610-363-1110. We got time, folks, if you want to get in. Hey, Mark, we looked into Don's question in that last segment there. It was a great question. Did you want to just fill in our listeners what we had?
Don, you're absolutely right. I was wrong, and you're right. Maybe it was the platform I was on that didn't allow it over the years, so I just assumed that was the regulations way back then. But, yeah, you can transfer in kind, at least most securities. So let's just go with that because I haven't looked at see if there's any exceptions to those.
Right.
But it is the same as selling it because you're going to be taxed on the value of it, and then contributing that to a Roth and buying back in. The only difference is they do it behind the scenes and it carries over. And there's no day or two of a sell and buy on it. So
Exactly.
You're absolutely right. I love smart people.
That's awesome.
I love people who are comfortable. And I'm very glad there's people comfortable calling in and saying, hey, wait a minute, Mark, are you sure of that?
Donna was a great clarifier.
Thank you for that.
Now, Mark, I think too, it is important to know you were correct also. It is a taxable event.
It is.
And like you said, on the, like we were talking about, on these new trading platforms, I mean, they make it very easy.
Yeah.
It's a click of the mouse, it's a click of the button.
It may have been clear, it may have been true all the way through. All I'm saying is that the platform that I use for my RIA may have said, no, we don't do it like that.
Right.
And I had to write it down in my book as you can't do that.
There you go. Yep.
Thank you for correcting me.
That's great. And I saw Warren in the chat had mentioned that also. So Warren, I hope that makes some sense for you there, brother. It's a great clarification.
You know what the best kind of client is?
What's that?
The intelligent
ones.
Yeah, absolutely.
That's right. Yeah, I've found that intelligence. I've actually found, Mark, teachability goes a long way too. If you're willing to learn. That's why I love my job, because I get to sit here next to you and listen and ask you questions and learn. That's pretty cool.
As I throw out pseudo-right answers.
No, not at all. Not at all. No, it's good. 610-363-1110. We got a call coming in, Mark, from Joe. Joe's calling us from Kansas. Joe, good morning. You're live on Financial Issues. What's on your mind?
Hey, good morning, guys. God bless you all, and really appreciate what you do. And I've had a lot of peace of mind ever since I've been involved with you guys. It's been about, I think maybe 5 or 6 years.
Awesome.
Thank you, Joe.
And welcome to the show.
Okay, good to be here. My question is, I'm 74, just turned 74, and I've always been growth and income. And so now, for the last 2 or 3 months, I've been slowly allocating just to the income asset allocation. And my biggest question is, I'm probably about 90% done doing it.
Okay.
And the fixed income, we have the FI 68 and FI 55, and then I can't tell you because I'm not at home. The BIL.
Okay.
Yeah.
And those are the 3 that I have.
So those are Timothy plans, right? I don't have them up on my screen yet. The fixed income and and pardon me?
Yeah, 68 and 55. They're both Timothy.
Right.
Yeah.
So that's what's recommended. So, the actual question is, so where would you recommend me to go with the other half of the money I have left?
The other half. Where's the first half going? To BIL and
it's gone into those 3. Okay. Most of it into, I think, 55.
Okay. Well, here's the bottom line on that. When you're investing in a mutual fund or an ETF, you're investing in a bucket full of all sorts of fixed incomes and those fixed income ETFs. I would even spice it a little bit with the Timothy Plan High Income Fund. It's a little more aggressive, but that might be like if you did half in the half in one, half in the other, or almost half, 40-40, and then maybe 20 in the high income one. Just spice it up a little bit, get a little more longer term but higher interest from those, and don't be afraid of filling those out, because you're not buying a single thing. You're buying hundreds or thousands even of different bonds, different government securities within those. Did that make sense?
Right. Yes, sir. Absolutely. Yeah, that makes great sense. That gives me, I was close to what you're saying, but now I feel you've given me confirmation.
Well, good. Yeah, you were on the right track all along. So
sometimes that's all it takes, Joe. Just a confirmation, right?
Yeah,
brother?
yeah.
Right, just a confirmation. So, all right. Well, thank you very much. Love you guys, and I'm going to continue to listen as always.
Well, thank you. We're glad you're with us.
Appreciate you, brother. God bless, Joe. That's good, Mark. Let's go to Bill. Mark, Bill's calling us from Virginia. Bill, good morning. You're live on Financial Issues.
Hi. My question was I bought Timothy funds initially directly from them, and now I have accounts in Fidelity, and I wonder if there's any. I mean, I know I could look at everything together at Fidelity, but if there's any advantage to leaving them strictly with, in a sense, maybe somewhat more diversified under that umbrella. Whether or not I should move them together or not.
Okay, great question. Now, let me rephrase it just to make sure I understood. You have direct at the fund at Timothy Plan, and then you have a Fidelity account. And you're wondering whether you should move those both into one platform and whether it matters or not. Did I get
right?
Okay. Understanding that like that, I'll tell you, my personal preference is one platform, one statement. Even if you have multiple accounts, if it's all on one platform, you can see everything together. It's easier for you to manage it. It's easier to understand it. You can see a total return on the investments, year to date, quarter to date, however they put it into your quarterly statements or monthly statements or online. So I would go ahead and move everything to your preferred platform, which is probably the Fidelity at this point. Now, I love Timothy Plan. I love everything that they're doing there, the way they invest with biblical integrity, the way they have managers who are long-term managers who are looking to grow it steadily over time and do well. And so moving those Timothy Plan the Timothy Plan funds that you already have to the Fidelity platform is not going to change that diversification, is not going to impact Timothy Plan in any negative way. So for ease of managing God's money, I would get it all on one platform. Just a suggestion.
And you know, Bill, you might even consider asking yourself, which platform am I most comfortable using? And maybe just pick that one. That could be something that you consider also.
But if he's doing anything other than Timothy Plan on the Fidelity, they can't move that.
That's exactly
Plan.
Right. That's exactly right. Yep. There you go.
Okay, great. I really do appreciate everything you guys are doing. Welcome, Mark.
Well, we appreciate you. And,
Thanks, Bill.
It just feels so good with these calls we get in, people like you, partners like you, we get to stand arm in arm on the front lines of investing with integrity, helping to shape our society in a way that honors God, a way that our investments help influence what kind of culture we're going to live in by staying away from those companies who are using our dividends, the owners of the company's dividends, for evil reasons, for ugly reasons, to influence the culture in a negative way. I just love that we have so many brothers and sisters, as our call-in show, that are standing with us to in Christ to do this. It's makes me feel good.
It's awesome, Mark. And that is why, folks, if you haven't signed our Nvidia petition yet, you got to do it.
Absolutely.
You got to do it right now. Yeah, there's no personal vendettas against Nvidia.
No,
there's nothing like that. We've seen them misusing shareholder dollars. They're such a big company. They're the darling of Wall Street. This is David and Goliath here. This is absolutely David and Goliath. We don't have the resources that they have, but we have the God that they don't.
And we have the pen.
And we've got the pen. That's
what's important. To sign that.
Exactly right.
Sign that petition.
Yeah.
And we also have the Lord, so we win eventually.
That's right.
But why for Nvidia and not others? I've been asked that already. Well,
that's a good question.
There's going to be others, but this is this is the Goliath of Wall Street, and this will bring attention. Already, we have that article, the op-ed that was printed on.
Was on Daily Caller. It was released on Wednesday, I believe. Folks, you got to check that out. Mark did a great job. It's really good.
We did a great job, actually. So everybody here did a great job. We brainstormed on that one, and then I finished it up and got it to him, and it's really good. But we come together as a family to get our voice heard so that Wall Street understands we're not going to tolerate it anymore, and we're not going to own your stock, and there's going to be hundreds of thousands, millions of people who are just going to move on and look for those companies. At the very least, don't offend God, don't grieve his heart. And it may not mean anything to him, but eventually it will. And we saw that with different companies over the years. They said, we don't care. And then slowly they started cleaning up their act.
Yeah.
Come on, Nvidia, join us. Clean up your act. Get back to work. We love you in so many ways. We just can't partner with you because you're embracing things that are just destroying kids' lives and creating a society, or trying to create a society that does such.
It's well said, brother.
Yeah.
Really good stuff.
It's a shame to me that companies do that kind of stuff. But, you know, when you get so big, when you get so much money, like Sam, you know.
That's right.
When he gets too much money, yeah. You know, that kind of stuff happens.
Beware what happens. No, I'll be responsible. I'll be good.
Okay, thank you for being biblically responsible, Sam. And I do want to also say thank you so much for this week. You all made it wonderful for the first week as hosts on Financial Issues, and I look forward to being here a long time with Seth, Sam, and the whole crew, and with you, those of you who love God enough to invest with biblical integrity. God bless everyone.
If we ever forget that we're one nation under God, then we will be a nation gone under.
Thank you for joining us. This has been an FISM production.